Hello everybody, welcome back. Let's get stuck straight in. I'll try not to take up too much of your time. So at the moment, just focused on Bitcoin. We're going to look at some other things, including the Dixie as well, which I think are going to tell a different story. And the US 500, basically the S&P stocks. So first of all, Bitcoin is positioned in a way that leads to continuation. It's above all moving averages on the daily here, but come down effectively between the 10 and the 7 simple moving average, which is still bullish, obviously. But back over to the 4 hourly, we had that big move down yesterday from the climb up, so it's not too bad, but straight down into a 21 exponential, 1, 2, 3, 4 in a row, and now for the first time, I suppose in the last 12, 16 hours or so, we've managed to get back above the 10. So look, it does look like it wants to kind of creep back up. There's no getting away from that. That's kind of what it looks like. We're looking over at momentum again. It still looks quite good. We don't really have any real reason to doubt or dispute what it is that we're looking at there. So that looks good also. Obviously the weekly is still good, but we're floating outside of the Bollinger Band for the most part. Bearish divergence as well, significant. Money flow index has creeped up to 85, and just for context, if we go over to this, it does go higher than this regularly, I suppose, over this sort of, well, how many years is this now? 14, 15 years? But as much as it does go over here, sometimes it doesn't really like being up here for very long. And if you're looking for much higher moves, larger, more continuous moves up, it's unlikely to really be able to do it much more from here, especially if we're assuming that this cycle has another year left in it, which it should do, but it may not if we carry on like this. So again, be careful what you wish for. It'd be much better if we did come down. And I suppose using the money flow index and that bearish divergence as a barometer of risk, it's still too risky, I'd say, to think about going in on this or going long. It's obviously too risky going short because it's so volatile. So what you say? Well, I can hear you thinking, oh, so what are you saying? No trade? Yeah, basically, yeah. Basically saying don't trade. Cash is a position in itself. So, we've established that there is probably going to be another attempt to move back up today on Bitcoin. But, what is it that you're looking to... You've always got to work out your risk to reward. What's the risk? What's the reward? If it's even, it's not good enough. If the risk outweighs the reward, it's not acceptable. If it's the other way around, that's fine. Which is why buying into these things from lower prices is the way to go about it, not when things are high. There's probably a lot of tweets and YouTubers out there saying, oh, don't worry, this is where we are in the cycle, pointing to this tiny little blip on a chart. And look, that might be the case. But, what they don't say is, but by buying here, you are looking to risk 50% of your... that is also true. So let's have a quick look at Ethereum for a bit of a guide for altcoins. Ethereum, so... high, low. Are we going to make a lower low? Is this where we're going? 3,500? Is that where we're going? I would say that would be a good place to start with. 200 exponential on the 4 hourly, giving you a golden cross retest. If we come down further than that, that's fine. All these areas down here, 3,000 is pretty good as well. Recognize the amount of bearish divergence that we had that led to this move down might be part of the reason why alts got hit so hard on that tiny little sneeze that Bitcoin did. So look, I know everybody will be calling for Ethereum to go breaking out from 4,000 and beyond, and it might, right? It might do that. But again, recognizing the risk versus the reward. Are you entering in based on a hunch? Are you hoping to make a load of money immediately, or would you much rather wait? Because the risk is here. There is risk involved. There's at the moment, I would say there's as much risk as there is reward, so it's a 50-50, which is like a gamble. It's a roll of the dice. Well, less than that, really. It's a flip of the coin. It's red versus black. It's not. That's not really what trading is supposed to be about, really. You've got to buy those supports, and I suppose if you're looking for a big swing, you are looking for lower on this one. For continuation, you've got one drive of bearish divergence. So, look, I mean, I'm not here to ruin the day or anything. We had that big move down. We saw how dramatic it could be, and we could be looking at more. That's all I'm saying. I'm not saying that it's all over. We're going into a bear market. I am thinking, though, that another swing lower would be more than acceptable. Reset the oscillators, get us down, get us ready to reaccumulate and maybe move back up again. That would be much better. you know, and all those gains that were made over November, you don't want to see them disappear just because you're greedy and, you know, looking to buy outside of a weekly Bollinger Band with bearish divergence and a high money flow index. You know, this is just my opinion. You know, everybody's got a different risk appetite, and it might be more than mine. So let's have a look at the Dixie. So this is interesting. So the Dixie is actually breaking out a little bit now. So we've managed to move back above this high. We had to move back up, and look, we're getting picked up on the 7 simple moving average. This is again looking to probably continue on. We've got pump signal that was generated when the itchy cloud formed this green over here and the cross over here, which means that the pump signal was formed at a lower area. And we've broken out of the resistance, so the next target on this is probably going to be somewhere along these lines, you know, 108.2, quite close to, if not the wick high over there, maybe a bit further. So you know what happens sometimes when the Dixie goes up, everything else goes down. If we go over to the daily, we've got hidden bullish divergence above all moving averages, so the Dixie is bullish. And if the Dixie is bullish, then you know, you do have to consider what that might mean for all, you know, every other asset out there. Let's have a look over at the US 500. So the pre-market is opened up green so far. Whether it stays green is a different story, but it's certainly green now. Based off that 20 moving average on the 4 hour, it looks like it wants to keep going up for a little while. Again, this is just a pre-market. The daily is surfing above all moving averages, so it would appear that everything's bullish, or gives the impression that everything wants to go up. You know that can't be the case, really. I mean, it's very rare that every single thing, including currencies or dollars, go up at the same time as assets. So I'm just a bit skeptical as to what's going to happen. And these sort of environments like this do require a bit more caution than anything else. You know, what is your target and why? You know, is it further up? Okay, that's your choice. Get your exit points or whatever. Is it further down? Excellent. Get your entry points, whatever. But don't forget where we've come from, and especially in the case of altcoins, where we've come from and how fast we came from there. You know, it would appear that it's easy for many people to forget, you know, where we were, you know, the beginning of November, like a month ago. In the case of XRP, we're all the way down here in the 50s, you know, within a 27-day period, close to 500%. So these things aren't quite normal, and to have a dramatic reaction on the way down since we've lost this support here, you know, it's flipped the resistance. You know, the next thing down will be 213, then perhaps maybe down to 260, then maybe even all the way down to below $1. And so you have to recognize these things as real. You know, I recognize them as real. I think they're more than healthy. I think this is exactly what you'd want to see, and it might disappoint or upset a lot of people, because, you know, they've heard on other channels that it's going straight up to 100,000 billion gazillion dollars, basically. But there's not really the evidence for that, to be honest. And if there's no evidence for it, and if there's evidence for further consolidation, then, you know, you might as well put yourself in a protective stance and wait for a better opportunity. Remember, all of that time throughout the summer, we were saying just wait for a lower, start to dollar cost average towards the end of the summer. It's likely going to, you know, consolidate for a long period of time, is what we said, you know, the beginning of last year, and your opportunities will exist at the end of summer, and they did, clearly, right? But all of that took a while, you know, and, you know, as much as it rallies up fast, the planning and the positioning did take a lot longer than the rally. You know, it took a long time. Yeah, we're talking 2 or 3 months really to make the most of those accumulation areas. And it's also why I'm not saying that this is the end or get out of everything, because these are good positions you wouldn't want to get shaken out of. But for new positions, I don't really think this is a place for a new position in anything. I think what we really need to see is a reset of all of this, and perhaps maybe even a more dramatic, longer standing consolidation. My best guess is that we're going to go sideways and down really for the rest of this month and turn around at the beginning of next year. That's my best guess. But even that, you know, we don't really have enough time has passed to really call for that in itself. But the bottom line is, there isn't really any support that I would consider to be a valuable support that's going to give you an enormous amount of return at this stage. Yeah, some alts will pop, some will do 20 or more percent. You know, they're talking like the big ones, based on their own charts. You know, you have some of these anomalies like Link the other day, that was good, but Link has been a different chart for a long time as well. That's been an accumulation since basically all of 2023. So, you know, we made the most of that. That accumulated for over a year. So you could have bought all of that like what we did and say, right, we'll just leave this and wait for it to go. If you accumulate for a year, it's reasonable to assume that when the breakout happens, which it has, it will perform different to everybody else, which was up and down and side to side. Some went up, some went down, but Link basically went sideways for over a year. So you're going to get these anomalies because the charts are dramatically different. But you and I all know, we all know, that altcoins mostly look the same. When we do these Patreon streams, and we're doing one tonight if you want to join, links in the description below for the Patreon, but you know, when we look at these, sometimes you just go from altcoin to altcoin to altcoin, and all the charts look the same. Sometimes I have to think, sometimes I wonder, I'm like, is my computer playing up? Is it showing me the previous chart? Because everything looks the same. And there's a reason for that, because sometimes it's often the case that the market just trends as one. Altcoins go up, everything goes up. Altcoins go down, everything goes down. There's a few little anomalies here and there, but for the most part they all look the same. And they do almost pretty much all look the same. And so when the market trends together like that, you might as well look at something like the total 2 and give yourself an idea of what's going on. And the total 2 did have that sharp move down. It's holding. It is holding. Yesterday's wick again tells a story. Today's support, 10 exponential. The odds are in favour of an attempted bounce from here, but you lose that, you come down to 1.46, and then you lose that. You could easily see yourself trend all the way down. And given the size and the speed of that last move, yeah, we could be seeing another one of those again soon. And that might mark an area on the chart which is more appetizing, you know, for entry points. But I don't look at this and go, wow, look how exciting this looks. I say, whoa, that's the sort of thing that we were expecting, and that's the sort of thing that we got. If we've seen that already, and this is now the sort of behavior that's taking place, can it happen again? Well, I mean, this is a high, this is a low. So far, this is a lower high. You might be looking for a lower low, and it could take you down to the 50, this 50, or maybe even down into the 200s. Either way, risk appetite, what is it? You know, what do you expect from this? Now, just to put it into a broader context, because you'd be like, oh, if it's hodl bags. Yeah, so this is my general expectation that we're going to trend in this sort of manner, not to this extent, to these highs, but you know, in this kind of, with this trajectory, this is kind of the way I'm looking for it to go. It makes more sense on the log scale, and it's working out pretty much as I expected it to. I'm not saying that it has to go up to this level and back down. We could, yeah, there's similarities in here, but it's in a lot of cases it's off by a few months, but generally completes around the same sort of times. So we might be looking for this period now. Might have already reached our peak. We might spend a small amount of time, and again, this is weekly, so we might spend a couple of weeks going down before we go back up. We might spend more than that. The idea I'm trying to put across to you is that hodl bags should be fine. Depends on obviously what you're hodling, but if you entered in around these areas, end of summer, like we said, your hodl bags, they stay the same. But from a trading perspective, or from a brand new entry perspective, I don't really think that this area is particularly good. If Ethereum can break 4,000, that shows a change of behavior that might add more weight, because this chart is heavily dominated by Ethereum. This is only excluding Bitcoin. So yeah, add more weight to the idea that we will move up and continue to move up for altcoins. Continuation of alt season given to us by a change of behavior on Ethereum. But at the moment we haven't got that, and so it's a bit of a risk, bit of a gamble. Like I say, it's a coin flip. It's red or black. It's, you know, it's kind of that kind of vibe. So really, it doesn't warrant exposing yourself, or at least doing a dramatic exposure to the market at this point now. Especially, you know, looking at this as something that has happened and could easily happen again. So that will be that. Bitcoin, it needs to hold that 99,000, otherwise we'll be coming down to that Bollinger Band Center, 97. And if that goes down even further, we're talking into the 80s. That's really what we're looking at. And again, just moving it over to a weekly, we've got major supports around 87, a massive support around 77, and all of these are trending up. And the lowest support I'll be looking at would be down here around 71, 72. So hopefully that makes sense and it hasn't ruined your day. Other than that, I hope you have a nice day. Take it easy.